Dear viewers, today we will discuss kinds of profit. Very important topic. There are several types of profit. First one is accounting profit. Accounting profit is the difference between a firm's total revenue and its explicit cost, such as raw materials and labor. Accounting profit does not take into account implicit costs, such as the opportunity cost of using the owner's time and resources in the business. Second one is economic profit. Economic profit takes into account both explicit and implicit cost is equal to the difference between total revenue and the opportunity cost of all resources used in production. Economic profit is a more comprehensive measure of a firm's profitability than accounting profit. Third one is normal profit. Normal profit is the minimum level of profit that a firm must earn in order to continue operating in the long run. Normal profit takes into account the opportunity cost of using the owner's time and resources in the business. Fourth one is supernormal profit. Supernormal profit is the level of profit that is higher than the normal profit and indicates that a firm is earning above average returns. Supernormal profit can result from a variety of factors, including monopoly power, a unique competitive advantage, or favorable market conditions. Fifth one is abnormal loss. Abnormal loss is the level of loss that is greater than the normal loss and indicates that a firm is not earning enough revenue to cover its explicit cost. Abnormal loss can result from a variety of factors, including competition, changes in market conditions, or inefficiencies in production. In summary, we can say that there are several types of profit in economics, including accounting profit, economic profit, normal profit, supernormal profit, and abnormal loss. Understanding the different types of profit is important for evaluating a firm's performance and competitiveness in the marketplace.